Hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald. On this, what day do we have? Tuesday afternoon. I hope you all had a great start into the new week. As always, before we jump into the markets and my portfolio, let's get the usual disclaimer out of the way first. Everything that I share in this live stream/video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using, as flawed as they sometimes may be, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so in the past, is go and check out the Elliott Wave Principle. You can read this wonderful book for free online when you use the link in the description down below, and you can use the same link to get yourself a physical copy as well. That said, let's jump into my portfolio, and we can see we have a slightly red start into the day, nothing major, but a little bit. Hi, Cherry, great to have you here. Thanks for joining. So we have a slightly red start. Our portfolio is still unchanged. We still hold our 600 GameStop shares as our biggest position and 6 covered calls that we sold against that. We keep checking every day the market opens if it's worth rolling them potentially, or if we'll just wait for them to expire. Since the rest are smaller positions in comparison and not that relevant, we jump into the chart. We can see that for GameStop, as I mentioned, while it could have been potentially already the end of the retracement here, it was to be, while I didn't want to necessarily see it, we are most likely going to finish this correction. So this wave C up down here at the 78.6 retracement, where also wave A and wave C will be almost identical in price. So that's something we are looking for. That said, so there's not much else about GameStop. So today or for the rest of the week, there might be more downside. We're looking at an 8-hour chart. And then actually maybe early next week or in the middle of next week, we should potentially get to see the development or beginning of wave 5. Obviously, that is if indeed the correction will finish with this free wave move and will not turn into a more complex pattern. Overall, however, I'm still long-term bullish for GameStop. It's in my favor, considering that our calls expire here. I might, if there is open interest, be able to roll them down. Not sure if I would want to roll them out. Rolling them down would mean we earn a net credit, but still earn some premium. I believe it makes sense at this point to assume that we will get to hit the 78.6 retracement. And even after that, as we can see, even if we would have strong movement, it will be hard to reach the $30 mark, for example, by the 28th of March. So we would be probably relatively safe, and we probably will roll our calls down to the $30 mark if we can get a reasonable amount of premium for doing that. Other than that, if we jump into Barnes & Noble Education Inc., if the chart deigns to load, does the workaround work or not? Let's wait and see. No, also doesn't load. There we can also see that it's red. No, it loads here. It's like really baffling why it loads here and why it doesn't load on the main chart. But we broke through the 78.6 retracement here. We also broke the low that we had here, throwing the idea out of the window that the correction is done here, which means I have to make this bigger. I still believe that overall we should go higher. Yeah, that's now gonna load again. Oh my, yeah, let's see how long it takes. I still believe that we have a very, very picture perfect impulse wave here, almost perfect or very perfect corrective wave here. And then we have this weird movement here that technically could mean that this is an ABC move, so a corrective move, and we go further down, which I just don't want to believe, to be honest, considering the previous movement here, or that this is basically wave 1, wave 2, and that's the beginning of wave 3. However, if we break 831 to the bottom, then we would have to reevaluate, because then I'm honestly not 100% sure. So we would have to reevaluate and then either decide to abandon our position and take a small loss on our 100 shares, or use the time to potentially increase our exposure. The real break even or the real stop loss would be at this low. Theoretically, actually, the real stop loss would be down here at 379, which is quite a steep decline that it would have to go through. But yeah, anyway, let's see, does the chart load now or not? Let's give it a minute. In the meantime, markets are open, which means we can look into the GameStop calls. So we sold the March 28, $37 calls, which we would have to buy back. So buy back 37, and we could either roll them down, so which would look like this, and basically pocket 150 or $180, almost 200, since we have 6 of them, yeah, which is not too bad. Or alternatively, we could, as said, if we consider GameStop, does that also change the other chart? No, thankfully not, yeah. So if we consider GameStop, we could also, if we want to roll them out, we would roll them to 45 days. So let's see if we can get some, that would be April 17th. But there we couldn't pick the $30 strike price. So we could pick April 17th, 35, which brings us less credit. Or if we pick 30, we obviously would pocket more, but we give up a lot. So I think we will try to roll them for the same date and for the $30 strike price. So that's what we go for. Let's try if we can sell that for, let's say, $40 per option. Doesn't trigger. Yeah, mid is moving, so let's actually set it to $50 per option. So if we get $300 in premium for rolling it out and up, for that obviously we would need a little bit of an upward movement, so to increase the premiums, which works both ways. So because it increases the premiums of our $37 calls and of the $30 calls, but I think the $30 calls, due to being closer, should be affected first or more. But yeah, we have that order now in place. We'll see if it triggers for that. Maybe we should have just submitted it with 34 and hope that it fills, but I've often enough sold the options to, or wrote the options too cheap. And I feel like manually trying to get more doesn't hurt, especially since we're also good if we just wait for them to expire and then just sell new, maybe jump again into weekly calls. Now, Barnes & Noble doesn't seem to load, but again, like the point stays unchanged. 831 is our first point of worrying quotes. Second point would be the starting point here, and the real stop loss would be at 379. Thankfully, our exposure is not too big, so even if the pattern turns out to be invalid at some point, we don't really lose much. Immersion, yeah, so we have updated data. Yep, that's from, no, that's March 2nd, and we are now at March 4th. But it's updated, yeah. So are we on a weekly chart? That's why, yeah. So again, now we hit our minimum target. However, I would expect that we hit the 61.8 retracement, so we still are in for a little bit of suffering here before we can expect a turnaround. Technically, also the 78.6 retracement would be possible, but I just right now don't believe it will be that one, because 61.8 is the more common one, and it fits into that we fall into the area of wave 4 of the previous impulse wave. Or in that case, it's actually a diagonal of 1 degree lower. Yeah. So either way, we're gonna have to wait and see. And since it's a weekly chart, we probably will, I don't know, wait till end of April, May, June to go down here, and then slowly, hopefully, be right and make our way up. Cost, we're clueless in quotes. Our position there is also relatively small, but bigger than what we have in others. I'm having trouble with this movement here, especially since this here appears to be a 3-wave instead of a 5-wave move. We have to worry if we break around 390, 380 here. Until then, we're just gonna watch and enjoy the show. Our position is not big enough to worry too much. NEO, after again showing something akin to a breakout, we again start to retrace lower. Same like we did here and partially here. So yeah, we still wait. I would actually increase our position. If we break 363, we would abandon it and take our hit. But if we trend lower here, I would be willing to just increase our position. Yeah, and I believe we have a perfect impulse wave 1, 2, 3, 4, 5 here, and as a result, should have a retracement followed by the next impulsive wave. yeah, maybe I'm wrong, but from the looks of it, it's just too perfect a pattern to abandon it. Yeah, and so we might jump into here. Bitcoin, interestingly enough, rallied briefly and now retraced already. Obviously, the news that came or that was made by the orange buffoon that's currently heading the White House in the US, or the Russian asset sitting in the White House, brought up the spike, allowed some insider traders to cash in insanely, and now we're retracing again. It remains to be seen. As said, it's possible that our retracement finished here based on the previous pattern. So we basically have our 1, 2, 3, and another with 4. It's also possible that that fourth wave hasn't finished yet. I like the idea that it finished here by hitting the 38.2 retracement at 82, but there are no guarantees yet. Since we're on a daily chart, we'll know in a week or two if the retracement is finished and this is just the next impulsive wave developing, or if the retracement actually will take us further down. Yeah, not much to do, but wait, I guess. That actually reminds me, 1 second, I want to check workspaces, modify, add connection. I'm curious if there is one exchange I have an account with that lists Pi coins. No. Okay, so because I also would like to have my chart in here instead of on TradingView, but no. So pretty much we covered Algorand yesterday. So potentially we hit the bottom here at the 61.8 retracement. Yeah, I think I mentioned it, that we might maybe see another move a little lower. Next couple of days will show. So by a little lower, I mean hitting the base channel that we have here using Kennedy channeling technique. So, but after that, I expect the fifth wave, HNT, finally reaching the area. We would have to go lower than where we were here. So 260 would actually be a perfect hit for a big A, B, C retracement before we move further up. Storage or StoreJ. There we don't have a labeling. Yeah, I think we are not. I think we have to update our labeling here because we have an impulse. And we have what initially appeared to be the correction, but then we don't hit the required levels. So no opinion here right now. XRP should move sideways and down out of the channel to basically ideally hit 161 to finish a corrective move before we get the last wave. XYO is now trading a little bit lower than expected. We already hit, or actually no, we hit the minimum target that we would expect. Considering this development here, I would expect, I mean, we're right now looking on a daily chart, we would have to look closer on this move here, but to potentially hit even the bottom of the base channel, we would have to worry if we break below 0.7 cents, so entering the area of wave 1 or wave 2, depending how you look at it. But overall, the pattern still stands 1, 2, 3, 4 in progress, and then we should get our wave 5. And that's that. Amazon, there we are now in an area where, yeah, like, I mean, it's still okay. It's still possible that we get another push and hit our minimum target, but overall, it looks more likely that we fell a little bit short of our usual minimum target and that we actually might be retracing this entire move now, in which case, we would expect we only need the 38.2. We would expect to hit the 238.2, that's what I meant we need here. But in which case we would expect to hit the 38.2 retracement. It will still take a little bit to be sure, but it starts to have the hallmarks of, okay, wave finished, we are getting the retracement now. NVIDIA, probably the whole market is suffering right now with a few exceptions, yeah, so NVIDIA appeared to potentially have the retracement finished, but obviously now we got a new low. So there we don't have a full labeling. So as we can see, we only guesstimated the last part here. But visually, the worst possibility would be that we retrace this entire move now, or even the bigger move. So there's going to be a lot of pain if that's the case. But we don't hold a horse in that race, so it doesn't matter to us that much. SMCI having a slightly green green day, surprisingly. Not sure if we'll get a chart. Let's check and see. I'll have a sip of Apfelschorle while we see if it loads or not. Yeah, it doesn't look like it. If we use our workaround to open a new chart, probably also won't load. Can we switch it to weekly? No, not while it's loading. It's baffling. I still made so far I made little progress with the motive wave support to get this sorted out, but I'm sure we will at some point. So no SMCI, we don't care about Intel. Frontline is what we still care about. So although I think they're a defense contractor, yeah. So you notice that I say I think I solely trade based on Elliott Wave Theory, for which it doesn't matter very much. Yeah, which asset class or industry a stock is in or an asset is in. It only depends on mass psychology. And obviously, defense contractors in the US should potentially do bad right now with the Russian asset that's in the White House right now, having a pro-Russian stance and planning to reduce defense spending and so on. Not that the US isn't overspending, but it's obviously the only countries that benefit from that reduction, since the money won't be used for anything good anyway, are the adversaries, so mostly Russia and potentially China. But anyway, that's politics. So we also don't get a chart for Frontline. So, okay, yes, I want to close the chart. Then I guess that's it for today. So what we're waiting for now is basically for GameStop to finish the pattern. As said, next possible candidate for the end of the correction would be the 78.6 retracement level. And yeah, we'll see if it hits that. If it breaks that, we will have to start to worry a little bit, but our real issue, we really would only have to worry about if we break the $20 mark. But even then, I would still stay bullish on GameStop long term, at least for the next couple of years, and keep selling covered calls against my shares. Obviously, our portfolio performance this year is off to a bad start in terms or in comparison to last year. So I switched to Interactive Broker in the middle of May last year, and we finished the year with roughly 100% profit. This year so far we're at -19. We are slightly worse off than the Nasdaq, which is at -5 and has been pretty much moving sideways for most of the year. But I don't think it makes a difference in the long run. I'm fairly confident that this year we also will beat the markets as we usually do. But I mean, at the end of the day, only time will tell. So yeah, as always, make your own decisions. You know, don't just bet your house because I believe something will go up. And yeah, with that, we're going to call it a day. So thanks for stopping by. I hope you were able to take something away from today's stream. And with that, I wish you a pleasant rest of the day, and then see you in another episode of Daily Market Mastery tomorrow. Till then, bye-bye.